as investors, and everybody's got an idea of how they perceive investment advice. And they sit down with someone who they think is an investment advisor, an expert, and what's the kind of questions that they're going to ask? I think the most obvious one is, what do you think the market's going to do? Or it could be a second question, do you think the Chinese market has bottomed out? And if you have all of these questions, you could easily paraphrase them to be, please look into your crystal ball and tell me what's going to happen. Now, why do people want this as investment advice? Well, it's simple. They believe they need to find someone who can give them an accurate forecast about the future because they need that to be a successful investor. And nothing could be further from the truth. I always tell people, look, the bad news is nobody that I've seen can predict the future accurately on a consistent basis. The good news is you don't need that to be a successful investor. Why? It's capitalism. There's a positive return on capital. It may not be there every day, every month, even every year, but over the long run, which is what investing is all about, the positive return is there. Okay, so it's there for the taking. This past week, it's a lot of volatility in the market. And I like sometimes to watch the talking heads because to me, it's humorous. And what the talking heads, when the market, as you'll recall, this past Monday, the market dropped very shortly. And immediately the talking heads are giving reasons why. Wasn't this obvious this was going to happen? Of course, they didn't say that on Friday, but they go through all these reasons as to why the market's going down and basically giving the impression that the bottom has not been reached. And then they called that a market correction. That drives me crazy because the term to me means the market got it wrong, so now the market's correcting. Well, then to their surprise, the market goes up the next day, and they weren't expecting that. So now it's, sure, they're saying that, hey, today the market corrected the overcorrection from yesterday. And you see how silly it becomes. These people don't know. And if they did know, of course, they wouldn't be spending their time on CNBC or Fox Business News. They'd be making a lot of money because they know what's going to happen. They don't. And so you get these examples in life every day about the inability of people to make these accurate forecasts. And so you've got to get away from that and just understand that if you diversify, stay disciplined, keep your cost under control, you're going to have a very successful investment experience. That's the job of an advisor. This last week, the volatility creates tremendous stress for clients, okay? And I always used to use the analogy of firemen. They seem to have the greatest job in the world most of the time. I used to go by the firehouse and they're out there playing basketball. But what I realize is that, they may be playing basketball, but on Friday night, they may have to go into a burning building to save a child or something. That's when they earn their money. And you as advisors, when we get bad markets, volatile markets, that's when you earn your fee. Because it's easy when the markets are up, like we've had this almost 6-year bull market. It's been easy. The difficult times may be ahead, but that's when you earn your fee, so you need to be prepared. You need to do those things. You need to train your clients so that they can avoid most of the problems.